Welcome everyone to today's session. Today, I'm very happy and honored to have with us Mr. Chye Kit, who will be able to speak to us about regulatory technologies. Chye Kit is the co-founder and CEO of Cynopsis Solutions. So under his leadership, Cynopsis Solutions is actually grown to be named the top 10 fastest growing company in Singapore 2020 by Straits Times, and one of the top 50 high growth companies in Asia Pacific by Financial Times. So Chye Kit has 20 years of banking experience in Asia, and he has received the much coveted MAS FinTech Awards 2018 and was named as a top 10 FinTech leader in Singapore 2019 by the Singapore FinTech Association. Chye Kit also serves as the chairman of the SFA RegTech subcommittee. So we're very glad that he will be here to share with us his expertise and knowledge on regulatory technologies. So over to you, please, Chye Kit.
Thank you, Professor. It's my pleasure to speak to all of you. And what was not mentioned earlier on about myself is that I graduated from NTU, Bachelor of Accountancy, in 1997. So makes me an alumni in a sense. So it's very honored to be speaking to you about RegTech, giving back to the university that I graduated from 20 over years ago. All right, so today I'm just going to share with you this concept of regulatory technology. Now, a lot of you might have heard of financial technology, or in short, FinTech. So regulatory technology is really a term that encapsulates the ability to use technology to help solve regulatory problems. So I'm just going to explain a little bit about regulatory landscape, the need for regulations, very, very high level, and talk about the regulatory approaches in Singapore. And if there's some time, we can talk about the region as well, or globally. Then some practical situations and use case and applications, how RegTech is actually helping the ecosystems, the banks, the financial institutions, or even as well as the FinTech ecosystems, to help them get to a better regulatory outcome. All right, so that's where I will be focusing on my presentation today. Now, why regulations, why financial regulations, and the forms and key regulatory bodies? This is what we're going to talk about in a short while. Now, when we think about regulations, quite often people will say, the rules are there to stop people from doing bad things. The rules are there to restrict business, and it can be very stifling at times. But according to Athenian philosopher Plato, it's one of the things that he said, but I sort of may have to paraphrase a little bit, is that good people do not actually need laws to tell them to act responsibly, while bad people will find a way around the laws. So as the financial ecosystems or the banking sector gets more sophisticated, where people are using technology to carry out a lot of their even financial transactions or offerings of products and services, things gets very sophisticated. So as regulation tries to catch up globally in terms of what needs to be put in place to prevent risk from becoming or becoming into a big problem for the world or for the country. That's why regulation is always trying to do a little bit of a catch up from jurisdiction to jurisdiction. Now, financial regulation is a subset of the word regulation itself, and it really stems to protect consumers, investors, markets, and the systems of how the financial ecosystem works. And that includes, the banking systems, the insurance sector, the fund management sectors, and you name it, you got it. So the financial sector, typically in every country, is probably one of the most crucial sector. It's like the heart of every country. Like in Singapore, the financial sector or the banking sector is the heart of Singapore's economy. Now, and with that in mind, there is a huge need to promote trust ethics and culture, and to reduce the systemic risk that presents itself within the financial ecosystem. And of course, lastly, and last but not least, is actually to reduce financial crimes, because where financial crimes takes place and takes roots in the country or in the financial sector, then a lot of bad things will happen and a lot of abuses will occur, which we will briefly mention later on. And that's why the evolutions of FinTech, evolutions of RegTech comes into the picture. I thought that would be interesting and important to lay the foundations of why this is even required in the first place. So there are many forms of financial regulations, and in the olden days, like say for example 30-40 years ago, a lot of the rules in Singapore and elsewhere are very rule-based, right? Rule-based typically means that you set a rule and there's no two ways about it. It's either you interpret it this way, say for example 100,000 is what you need and 100,000 is the threshold, and there's no argument about gray areas. So it's very restrictive and it's typically very one size fits all. Now in Singapore's context, or the slightly more developed financial sector or the banking sector, things gets a bit more principle based and outcome based. So like for example, one of the outcomes that regulators would typically want to achieve is that you do not want say for example insurance agents or financial advisors to missell their products, right? So you do not want market manipulation to occur in your securities market, for example. So it's very outcome focused, and you write your regulations and write your rules to achieve that outcome without being overly restrictive on people's interpretation of those rules. Now, very high level, some key regulatory bodies in Singapore in the context of the banking sector, in the context of the financial ecosystem, Monetary Authority of Singapore, in short MAS, and another one will be Singapore Exchange, SGX in short, that governs the listed companies, the brokers, dealers, and the securities trading that administers also implements the securities legislation in Singapore. Now, then you have your ACRA, which is the Accounting and Corporate Regulatory Authority, that basically deals with all sorts of business registrations, entity registrations in Singapore. And last but not least, also very relevant, is the PDPC that deals with Personal Data Protection Act or Personal Data Protection matters in general. And that's one of the, probably amongst the few, PDPC is probably the newest I would say regulator that is actually gaining a fair bit of traction in terms of what they do, that needs to be in sync with what the rest of the world outside of Singapore is also doing in relation to personal data privacy matters. All right. Now, won't go into too much detail about this particular slide, but just to give you a flavor, within the financial services sector, whilst Monetary Authority of Singapore, MAS, is actually the regulatory body, or as well as also the central bank, there are a number of associations within the ecosystem that helps to ensure that the members, which will be, say, for example, the banks that are members of associations of banks in Singapore, ABS, as well as members within, say, for example, the remittance associations, the life insurance associations. These associations plays an important role to make sure that their members complies with the rules and regulations that is set forth by the regulators or by the regulatory bodies in general. Now, then with that, it means that the participants within the Singapore banking and financial sector will obviously be performing what you call regulated activity. So if you're a bank, you need to apply for a license with the MAS under the Banking Act. The Act is the legislation. Now, if you are a securities broker or a fund manager, you need to apply for a license under Securities and Futures Act. And if you're a payment provider, if you're a remittance company, or even more recently, if you are a crypto exchange, then payments token exchange, then you will have to register for a license under the Payment Services Act, which is one of the newest legislation within the Singapore financial sector. And so with that in mind, the financial sector encompasses a wide range of participants, banks, insurance companies, fund managers, broker-dealers, payment companies, crypto companies, financial advisors and insurers, and so on and so forth. So it's a wide range, and that's all coming under the umbrella of MAS purview. Now, again, of course, there are other slightly more generic ones, and we're going to get to the point of what we're talking about on regulatory side already. It's actually things like anti-money laundering, which is the Corruption, Drug Trafficking, Other Serious Crimes Act, Terrorism, Suppression of Financing Act, and Companies Act and PDPA that I briefly mentioned earlier on. So if you think about the amount of legislation that is, or regulation that is put onto the regulated entities, which is your banks, your insurance companies, and so on and so forth, there is a huge amount of regulatory burden that needs to be complied with, right? So that is the rules. And then you have MAS coming in and say, okay, this is their approach. They want to build a culture of trust in the financial industry, and they want to make sure that trust, ethics, and culture in the financial industry is a continuous, I would say, work in progress, right, of improvement since the GFC. Now, and over the years, since 2007, 2008, with the GFC, things have improved, and MAS have also taken the approach to move towards smart financial center, and the concept of introducing sandbox, and more recently last year, express sandbox, to allow startups or fintech startups to actually test run their ideas or their innovations or their products and services in a controlled environment. Allows for the growth of innovations and startup fintech culture in Singapore over the last couple of years. So now with all that in mind, and MAS also has made a very bold statement that, a couple of years ago, it says it has no objection on financial institutions using cloud. Now, cloud computing, as some of you may know, is we use it quite a fair bit. If you use your smartphone to save your photos, your images, or your videos, we are using cloud even without knowing where it is stored. Or you back up your chat on your phone or on the cloud. So there is already been a lot of utilization on a day-to-day life, but you got to understand that the banking and the financial sector is a little bit less, I would say a bit more conservative, because you're dealing with people's money, you're dealing with people's investment. You have to be very conservative, and you have to be very strict on potential security threats, for example, if, let's say, the cloud offering is not done properly. So all in, it has moved us from a position whereby we're a little bit rule-based, as I said earlier on, and then with a slew of I would say additional products and services that needs to be brought to the market, because people's demand have increased, and MAS is also cognizant that technology will play a very important part in tomorrow's financial center in Singapore. If Singapore wants to remain relevant as a key financial hub of the world, then the need to move towards, besides smart nation, the smart financial center is something that needs to happen. Now, with a smart nation or with a smart financial center, what does that actually mean? It means that the existing incumbents, like the banks, the insurance companies, the fund managers, and all the rest, who have been performing or running their business in a very traditional way, will have to think of ways to reinvent it, and to make sure that they use digitization, automations, the different verticals of technology to ensure that they stay relevant. It's more than just using say a mobile phone to do banking services. A lot of things may need to change. So therein lies that the crux of this session here, which is basically to introduce to you the concept of RegTech. Now, because remember when I tried to define RegTech, or try to explain what RegTech is at the beginning of this session, we talked about RegTech being using technology to help solve regulatory problem, right? So this is my definition of RegTech. But if you think about it, if you try to use a horse versus a cart analogy here, if you look at this image here that I have in front, you can see that it is an image of a horse and an image of a carriage, and the guy who managed this structure, and then you have a couple of wheels here. So if you think about RegTech, in your mind, you have to perhaps think about it in a slightly non-conventional way. Basically, is reg or regulation or regulatory the horse or the cart? What about tech? Is tech the horse, or is tech the wheels, or is tech basically a structure like this? Because this is you can't have the square wheels. You have the round wheel. And what about regulator? Some people would say that this person is itself a regulator driving the horse, and the horse is actually the reg, and the technology is the carriage. So, but the last thing you want to do, is to put the carriage, the cart, in front of the horse. So when we talk about reg versus tech, I think it's not as simple as saying, okay, let's just find the most or the most hyped about technology, and then say just throw the technology at the problem, and then the problem will go away. That would not be realistic. So there's no right or wrong answer to this interpretation, but I would suggest that it's important not to put the cart in front of the horse, and it's also important to know that if you're using technology to solve a regulatory problem, then there need to be a certain level of understanding about regulation before you even try to solve the problem. Now, some characteristics of RegTech, I would say, is amongst those that have been suggested here. Now, cloud is actually one of the, I would say, important characteristic. Now, if you think about a service provider, say for example, a software vendor who wants to offer a RegTech services, right, or a RegTech solution, and typically in the olden days, you have a software that you need to install in the hardware, and then in the enterprise concept, or in the bank or in a financial institution, then you need to install that hardware in the server, and the server need to go into a server room. And then there is a lot of maintenance that needs to happen on a regular basis, which makes it very difficult to scale a business, because it requires a huge number of engineers, infra engineers, and architectures to be employed, because that makes the whole business not very workable. So one of the characteristics of RegTech is actually to be ability to use cloud, which is quick to deploy, and it reduces the cost, right, and the scalability as well. Cost is what I mentioned earlier on, and then the speed, agility to deployment, to test, to put, I would say, fix certain bugs, or to change certain configuration, parameters, and so on. This is one of those things that in the traditional way of enterprise-wide, enterprise-type solutions will not be able to react as fast, because there's layers and layers and layers of restriction before, for example, the source codes can be changed. So that becomes could become a stumbling block. So whereas RegTech solutions tends to have less of that, but it doesn't necessarily mean that you compromise on security, because security is still very important in all kind of offerings, especially if you're offering services to the banking and the financial services sector space. All right, use of potential certain verticals within the artificial intelligence domain, which could be the form of machine learning, could be the form of optical character recognition, image comparison, voice recognition, and so on and so forth. Those are areas that different verticals of RegTech may use, and as well as modeling, predictive modeling, and all that. So I'll go straight into the different verticals of RegTech. There's a few ways to categorize RegTech offerings across the whole world, but by and large, if you relate back to what I mentioned earlier on in terms of the slew of regulatory requirements, at least in the Singapore's context, you will realize that there's actually the verticals of RegTech is actually an evolution from the regulatory requirement that the regulated entities needs to comply with to begin with, right? So first and foremost, and by no means saying this is the most important than the rest of the vertical, regulatory reporting is one area where continuously burdens, I would say, the banks, the financial institutions, because it's a very highly regulated sector, and the banks or the financial institution have to periodically report, compile their data, put into statistics or forms, and report that back to the regulators, right? It could be the local regulator. If you're, let's say, for example, if you're a branch or subsidiary, where your head office, say, for example, is in US or in UK or in any other jurisdiction, then head office reporting and all that consolidation reports needs to be done in a certain manner that people can amalgamate all the records together. So a fair amount of things like how do you integrate, is that going to be on cloud, what is the speed, and what kind of automation is required. And ultimately, in these verticals, I think what's the most important is actually what kind of, I would say, quote unquote, template, or what kind of protocols that the specific regulator or the regulatory requirement has, so that the rest of the regulated entities can just follow that particular format, if you know what I mean. So a lot of that is actually, in the past, it has always been, the likes of Word, Excel, that sort of reporting, and then gets up to the regulator, and then it becomes another massive exercise to amalgamate everything together across the sector in order for the regulator to make sense, if they try to be effective on their regulation of the entire sector. So this is one area whereby there need to be a lot of close interaction with the regulatory requirement, and absolute need to understand what the regulatory reporting and the requirements are, right? Because you cannot say that I don't like this reporting format, but I like to design my own, when the regulators do not accept those format. Then there's no point in doing something like that. Now, another verticals will be around, the likes of risk management, and this is not new, right? Because for as long as banks and financial institutions have been operating, and also if you go back and look at some of the international, I would say, standards like Basel 1, 2, 3, that looks at risk management quite a fair bit. So credit risk, market risk, operational risk, liquidity risk analysis have been around for a while, and how people typically have been managing these different risk verticals have always been, using models. Models you don't have to you don't have to have a very sophisticated, say for example, software to do it. You can do it on Excel. But the concept of needing to create different scenarios. If the market goes up by this percentage or down by that percentage, what will it do to the risk that I need to undertake, and what does that mean in terms of my risk capital that I need to put on the line? So these are things that fairly, I would say, very niche and very specialized, right? So in banks, you typically will have departments of credit risk officers or analysts, and market risk and liquidity risk to deal with all these predictive modeling. But over the years, there's been a lot of possibility, as well as the RegTech solutions providers around the world have also been trying to put these models together and create a software that can actually be used by banks and FIs to run their predictive modeling in a more accurate fashion, rather than to be based upon the credit risk analyst discretion. So that's one vertical that I think is also very interesting, but it's very niche. Now, Another vertical, which is actually a very big vertical, is actually around identity management and control. We in the banking space, we call it KYC, AML, and CTF. KYC stands for Know Your Customer. AML stands for Anti-Money Laundering and Counter-Terrorism Financing. So this is by far one of the biggest sector of RegTech, and also quite frankly one of the area where financial industry has got the most problem with, and that's because it's a very laborious and it's a very onerous requirement on the service provider, which is basically the banks or the financial institutions. When they onboard their customers, they have to check the background, they have to make sure that this person is real, and so on and so forth. Then that check doesn't stop there. The check continues on, till throughout the relationship that institution has with you. For example, if you have a bank account with one of the bank, or if you have a trading account with one of the brokers, then that obligation to continuously do due diligence is forever and ever, unless you stop doing business with them. So that there is clearly and not forgetting that this area has traditionally been done on a very manual fashion and in a very analog manner. Now, manual means is labor intensive, analog means you are doing papers and pen. So there has been a huge increase in the need to automate this as well as to digitize this process. So I will talk about another use case in the next segment, but regardless, there has been it's a very, very big problem, and it hasn't been solved, and it's probably fair to say that no one particular solution will be able to meet all the entire spectrum of work that needed to be done. And it will also be unreal to think that a solution or a couple of solutions will be able to get rid of all the pain points of it being analog or it being manual, because it's a bit complicated. But it's a growth area. It is a huge growth area and a huge potential for people who might be interested to explore this vertical. Now, next, there is this vertical. I would classify that as compliance and regulatory management. Now, that would be various things, like, even for example, if you think about regulation or the laws, like I mentioned, the Banking Act, the Securities and Futures Act, these are legislation. And as far as digitization is concerned, at the moment, you can find, let's say in Singapore's context, you can find all these acts and all these laws and regulations in PDF form, right? In PDF form, and it's all, you can find that in Statute Online. It's publicly available. But the trouble with PDF, as we all know, PDF is an image, so you can't actually do much digestion of a PDF image unless you extract the data out or the content out, and then try and put it into a database, and that's where you can do some intelligent work like machine learning, contextualization or regulation and all that. So there are people who have built a business around doing this, exactly this. That means take from the PDF or take from whichever document that is available in semi-digital fashion, and then try to contextualize it, with the help of artificial intelligence over a period of time. Then you will be able to try to make sense and potentially relate that back to actual operational task or operational procedure that is being performed to address the regulatory risk that the requirements actually set forth for you. So automations of compliance processes, automations of the compliance and digitization of the compliance requirement, as well as the bank's policies and procedures, is something that I would say there are a number of outfits around the world who are looking at that. Now, last but not least, a vertical called monitoring and surveillance. It will include tools that basically try to, and this is not new. Some of these are not new, right? For example, market misconduct surveillance on securities trading market, as well as some of the FX market is not new. The ability to perform some level of monitoring, rule-based, or it could be a little bit more intelligent, in order not to be with some level of machine learning, will be able to reduce false positive, for example. And there is also in this vertical, because banks and FIs are required to monitor all sorts of stuff, right? And one of those things that I mentioned in this slide, you can see, market misconduct, fraud, and so on and so forth, and that's already happening. Now, one of those things that people are also required to monitor will be, or the compliance officers are supposed to monitor, will be people's conversations, right? Your conversations, whether your salespeople are overstepping the boundaries and mis-selling, and then putting on chats, like for example your various chat channels, whether are they misleading the customers, for example. So there are tools that's available today, to aggregate some of these chats that is available, whichever chat tools that is being used for official purposes, and be able to run analytics around it, and as well as to run some rules around it to be able to identify whether or not the person, the salesperson, or the advisor is mis-selling, for example. So these verticals are also it's a large area to grow, because bearing in mind that the concept of RegTech is actually to use technology to make regulatory compliance better, or to achieve better regulatory outcome. So any form of tools that is being used, or technology or techniques that is being used to help the banks or the FIs, or even the fintechs themselves to get to a better regulatory outcome is a win. Now, RegTech across different sectors, and people again may continuously think that, oh, it's all for the banks. Also, in part, for the last 20 odd minutes, I've been talking about banks. It's just collective terms rather than a term that is solely for them. Now, banks have always had it tougher, because they are being scrutinized, and they are also dabbling into fintech, and they are probably the worst of the lot, because they may be stuck with legacy systems, which makes it very hard for them to move around. And then there are other financial institutions, FI stands for financial institutions, that may have underinvested in technology, cannot compete, and they are also faced with the same tough regulation, right? And then you have your fintech on the right hand side. You have your the likes of various, it's a wide range. You can have the very, very huge fintech, global fintechs, but you can also have the smaller players, like the three-man startups in Singapore wanting to disrupt, say for example, the robo-advisors sector in Singapore, for example, right? Or the payment sector in Singapore. So these players, good at technology, but they lack regulatory expertise, and then they are also faced with the same tough regulatory requirements. So, and then last but not least, another verticals here is that the non-financial institution, the non-FIs. Now, when I say the non-FI, I'm referring to people that are also subject to regulatory requirements. For example, in relation to anti-money laundering, counter-terrorism financing, you have your non-financial services sectors, like your casinos, your accountants, your corporate secretaries, your lawyers, and your precious stones, metals dealers, and your real estate players are also required to comply with AML KYC requirements, which is no less stringent than the one that are imposed on the banks and the FIs. Okay, so just let that sink in a little bit, because people typically think of KYC as the bank's requirement, but for people who want to understand a little bit more about that, the requirement hits a lot more sector than what most people would think. Now then, last but not least, you've got your regulators, who are also under a fair bit of global pressure, to set optimum regulation. You don't want to go under, because if you go under means your ecosystems or your sector becomes too lax, and it becomes a little bit tricky, because bad things can happen. Remember the Plato's saying, and you also do not want it to be over regulation, because over regulation means it's too stifled, business will go away, then it will not be optimum. So you want to reach a thereabout right optimum level. And you are also required to consider, like I mentioned about regulatory reporting, you want to make sure that the regulatory reporting bit is actually not, for example, sandbox, you're using tools to effective tools to help yourself regulate more effectively. RegTech across the world, it's a suggestion that it's everywhere. Singapore, obviously, there are. As far as Canada, US, everybody is starting to put a closer watch on this area. Now, a bit on the trends portion is around, I've mentioned this a bit, I won't go into all the details. Further automations and digitization, workflow, the continuous monitoring, analytics, and all that, this is all given. And there is also a suggestion that with more artificial intelligence being used or being deployed into, I would say, monotonous compliance operational processes, then there is a possibility that artificial intelligence may replace some aspect of the monotonous, the low-level work that is currently being performed by human. So, like for example, trade surveillance, sanction screenings, and all these could potentially be, it's already being done by machine more so than human. Collaboration across the world, international bodies, regulators, and RegTech providers are starting to talk more closely together. An example would be even like for ourselves in Singapore FinTech Associations, and I chair the RegTech subcommittee, and we are already having lots of conversations with similar outfits, like say for example in Malaysia, in Hong Kong, in Japan, to form an APAC RegTech network, so that we can cross-pollinate our ideas, cross-pollinate our various jurisdictions, providers or RegTech players, and so that we can create more opportunities for each other. And last but not least, one of the trends is also with the concept of introduction of supervisory technology, which is in short SupTech. That is basically technology that is being used, or tools that is being used by the regulators to effectively supervise the entire sector, right? So that naturally will involve some level of big data analytics, as well as one pretty new concept is codified regulation. Now, RegTech ecosystem in Singapore, it is there, small but growing, mainly in the identity management and control space, increasing focus and support from RegTech by the MAS, RegTech versus SupTech. I wouldn't say that is one or the other. I think they work complementary to each other, and it will support. RegTech is for the regulated entities, SupTech is for the regulator, right? Then it makes it a lot clearer. And globally, RegTech ecosystem is estimated by a number of people to be worth more than $120 billion this year, next year. Now, very, very high level, quick, so what is the relevance of what we do here in RegTech? Cynopsis Solutions is RegTech focused on the AML KYC space. We've founded, bootstrapped, headquartered in Singapore. We've got offices in London, Abu Dhabi, Taiwan, Vietnam, looking to set up in the US as well. Founded in 2014. So we basically are very clear. We're basically very clear what are the regulatory requirements. Remember the reg verticals that I talk about, the reg side, and then we use functional technology to build cost-effective solutions for our clients around the world, which means that we automate, we digitize the process of know your customers, customer onboarding, and all that. Then, as mentioned earlier on, some of the accolades that we've achieved over the last several years are listed here. Top 50 high growth companies in APAC listed by Financial Times, and top 10 fastest growing companies in Singapore by the Straits Times, and so on and so forth. So, we're doing things. We're selling our stuff, and we're helping our clients to achieve better regulatory outcome. And we want to ensure that we become a global trusted RegTech solutions for our clients globally by combining our regulatory knowledge as well as with functional technologies to help clients achieve a regulatory advantage in that process of running their business. Now, we'll go into too much of this. We service a wide range of clients at the moment globally, and we focus on digital onboarding, eKYC, as well as transaction monitoring verticals for our clients. Now, that's it for me. Thank you very much. Contact details on the slide. Thank you.
All right. Thank you so much, Chye Kit, for your sharing session. That was a very useful session. I just have one quick question, sort of in the interest of time. I'm just wondering, like you were showing the horse and the cart, right? And as regulatory technologies become more and more powerful and help organizations, I'm just wondering whether regulators will be expecting even more in terms of the compliance as a result of the power or what technology can afford. What are your views?
Well, my view is it's a double-edged sword if you think about it. Yeah, I mean, but one thing for sure, one thing I'm very sure, because regulatory requirements will always get tougher, right? So leaving technology aside, regulatory requirements will always get tougher. As history will tell all of us, even from the very, very early days, if some of you are as old as me, in 1995, or so, where you have the Barings case. I'm not quite sure whether you guys are aware of that. The Barings Bank was brought down by this guy called Nick Leeson, and at that time, the amount of money that was lost was not that big, so to speak. Yeah, I forgot the number, but in terms of the quantum of financial malfeasance, if I can call it that, gets larger and larger every time you have another bad things, right? You have a GFC, you have this, you have that, and then where people's threshold gets higher, that means the threshold for financial malfeasance gets higher. Okay, maybe 1995, if you lost $50 million is a lot of money, but today you lost $50 million, nobody really cares. And then you're talking about billions of dollars, tens of billions of dollars. Just look at some of the problems that we see today, like for example, the Wirecard, Germany, $2 billion went missing out of the blue, right? So that's actually that. So what I'm trying to say is that with the threshold for financial malfeasance collectively gets higher, means our ability to withstand, shocks goes higher. Regulatory requirements will just go higher and higher over the years. So with regulatory requirements go higher and higher, and people starts to use a lot of technology in the pursuit of be it more revenue, better profitability of this operation. People need to make money, right? But if you are making money, then there is a certain level of risk. There's a certain level of gray area that you might thread into. So with the cart and the horse, it's really a reminder to people who are within the RegTech space to think about which is more important, which will you prioritize. If you are prioritizing, clearly if you're in business, you prioritize business. If you're prioritizing business without consideration that, hey, hang on a minute, there's this heavy cut of regulation or burden that you have at your back, and you just can't cut it and say, okay, leave it, let it stay there. You can't, because you got to carry it. But if you've got to carry the regulatory obligation along, then you got to find a smarter way to carry it along, which is where RegTech comes into play.
All right, great. So thank you very much, Chye Kit, for sharing. I think we learned a lot about RegTech in this session. We really appreciate you sharing your time and sharing your expertise with this. Yeah.
No problem. Thank you very much. All right. Bye-bye.
Bye.